I'm sure you've heard the news. Welcome to Global North. Please subscribe to the channel and press the bell icon for more updates. Here, we break down the stories shaping our world, one headline at a time. Picture yourself wandering through a bustling foreign market, the air thick with the aroma of spices and the chatter of vendors in unfamiliar languages. You're surrounded by vibrant colors, exotic goods, and the thrill of discovery that only travel can bring. You reach into your wallet for US dollars, confident as always that your money will open doors. But to your surprise, the vendor shakes their head, refusing your cash. Suddenly, you realize that what you thought was universal currency is just another piece of paper here. You're forced to hunt down a currency exchange booth, watching as your dollars are converted, losing a little value with every transaction. The exchange rate board flickers, reminding you that the power of your money isn't what it once was. This small inconvenience is a glimpse into a much larger global shift. The US dollar, once the undisputed king of international trade, is facing new challenges. Its dominance is no longer a given, and the world is taking notice. For decades, the dollar made cross-border business simple and predictable. It was the glue that held together deals from New York to Nairobi, trusted by governments and corporations alike. But now, the landscape is changing. More and more, nations and corporations are turning to alternatives like the euro, the Japanese yen, and especially the Chinese yuan. These currencies are gaining ground, offering new options for global trade. This shift isn't just about convenience or economics, it's a strategic move. Countries are rethinking their alliances and financial dependencies, responding to a world where power is more widely distributed. Today, the choice of currency is a statement. It signals new partnerships, emerging alliances, and a subtle but powerful rebellion against the old financial order that once revolved around the dollar. Take, for example, a recent billion-dollar deal between Canada and China, settled not in dollars, but in yuan. It's a clear sign that the world's financial map is being redrawn, one transaction at a time. The world took notice when a Canadian consortium agreed to pay $1 billion for new ships, not in US dollars, but in Chinese yuan. This wasn't a minor detail, it was a deliberate break from decades of tradition. For Canada, a major Western economy, to bypass the dollar signals a rewriting of global trade rules. The decision was strategic, reflecting a world where US-Canada relations are less predictable and China's influence is rising. By using yuan, Canada is building new financial bridges, bypassing the old, dollar-dominated routes. It's a pragmatic move, reducing risk, seeking better terms, and positioning Canada in a new global financial landscape. This deal is a case study in modern economic statecraft. The US dollar has been the world's financial anchor since World War II, giving America immense leverage, but this dominance also exposes other nations to US policy shifts and sanctions, making them uneasy. The result, a global trend called de-dollarization, countries and companies reducing their reliance on the dollar. China, Russia, and others are trading more in their own currencies and cutting back on US Treasury holdings. The dollar's share of global reserves is slowly declining as regional blocs turn to the euro, yuan, and other currencies. The world isn't abandoning the dollar, but it's hedging its bets, building a more diversified financial system. The era of unquestioned dollar dominance is fading. Recent years have seen a surge in trade tensions, especially between the US and China. The US imposed new tariffs on Chinese, Canadian, and Mexican goods, disrupting global supply chains. For Canada, this meant its once stable relationship with the US became a source of risk. Retaliatory tariffs and politicized trade made using the US dollar for big deals riskier than ever. Choosing yuan for the China ship deal insulated both sides from US political interference and financial sanctions. It's a defensive strategy, building a financial shelter from the storm of US protectionism. The move highlights why de-dollarization is accelerating. Nations want to control their own economic fate. Beyond geopolitics, paying in yuan offered Canada immediate financial benefits. China's weaker yuan, in response to tariffs, meant Canadian dollars stretched further, ships cost less. Direct conversion from Canadian dollars to yuan avoided extra fees and currency swings tied to the US dollar. Locking in a yuan price eliminated the risk of a volatile dollar inflating costs over a multi-year contract. Real-world examples show suppliers often offer discounts for payment in their own currency. For the Chinese shipbuilder, getting paid in yuan removed their own exchange risk, letting them offer better terms. Meeting the seller in the middle turned currency choice into a bargaining chip. Both sides gained lower costs, less risk, and a smoother deal. Canada's Yuan deal is part of a global shift toward multi-currency trade. As countries diversify their trading partners and financial strategies, the dominance of the US dollar is being quietly but steadily challenged. This isn't just about economics, it's about influence, leverage, and the ability to shape global rules. Each major transaction outside the dollar strengthens alternatives like the yuan, making them more attractive and liquid. As more nations conduct business in other currencies, the network effect grows, encouraging even more participants to join in. This gradual shift could eventually reshape the very foundations of international finance. The US is watching as its partners, including Canada and Mexico, deepen ties with China. For Washington, these moves raise concerns about losing economic influence and the potential for new alliances that could bypass traditional US-led systems. This deal signals Canada's willingness to chart its own economic path, even if it ruffles feathers in Washington. It's a bold step that reflects Canada's desire to secure its interests in a rapidly changing world and to remain competitive on the global stage. For China, convincing a G7 nation to use the yuan is a milestone in its push to internationalize its currency. It's a sign that China's economic influence is growing, and that its vision for a more balanced global financial system is gaining traction. These choices are building blocks for a new global order, distinct trading blocks centered on the dollar, euro, and yuan. The world is moving toward a more fragmented, yet interconnected financial landscape where no single currency holds all the power. Canada's move is strategic positioning for a multipolar world. By embracing flexibility, Canada is preparing for a future where economic power is shared among several key players, not just one. The future of trade will be defined by flexibility, not loyalty to a single currency. In this new era, adaptability and openness to change will be the keys to success for nations and businesses alike. Canada's billion-dollar yuan deal is more than just an accounting choice, it's a sign of the times and a bold step in a rapidly changing world. As global power dynamics shift, countries are rethinking how they do business and which currencies they trust. This move signals that Canada is ready to adapt, seeking new opportunities and partnerships beyond traditional boundaries. The US-China trade war has turned the dollar from a neutral tool into a potential risk. For decades, the US dollar was the backbone of international trade, but rising tensions have made it less predictable, and even a source of uncertainty for many nations. By paying in yuan, Canada insulated itself from US volatility and secured better terms. This strategic decision not only reduces exposure to currency swings, but also opens doors to smoother, more direct trade with China, one of the world's largest economies. This mirrors a broader trend. Companies and countries worldwide are getting better deals by using alternative currencies. They're diversifying their options, negotiating more flexible agreements, and building new financial bridges that weren't possible before. The deal is a symbol of de-dollarization and a more multipolar financial world. As more nations follow suit, the global economy is becoming less dependent on any single currency, creating a more balanced and resilient system. For everyday people, this could mean more stable prices and resilient supply chains. When countries have more options, it helps protect consumers from sudden shocks, shortages, or price spikes caused by global conflicts. Canada's move is a glimpse into the future of global commerce, one where nations chart their own course, forging new alliances and exploring innovative ways to trade and grow. The world is recalibrating its economic compass, moving beyond the old routes and embracing a new era, one defined by flexibility, cooperation, and a willingness to explore uncharted territory.